basically, if you have a position in GLD or SLV or a position in gold futures and gold blows up, the exchange, whoever manages it, the CME, the LME, the LBMA, whatever, they're going to take everything from you. So, like, look what they did. If you expect to have anything useful from a position in GLD or SLV or even PSLV or PHYS, which is Sprott's physical gold and silver. And I'm not saying anything bad about. I love Eric Sprott. Like, he's a really good guy, and his products are fairly good for ETFs. I'm not saying anything bad about Sprott, but those are derivatives too, because when the LME, when the London Metal Exchange actually reversed trades, that's basic contract law being broken, and that's really a statement saying there is no private property in this anymore. We manage it all, and we're going to tell you who gets what. There's nothing you can do. This is all a game that we control, and if it gets out of hand, we're going to take everything. That's what they've showed that they're going to do in nickel. They're going to actually reverse trade, steal billions of dollars from people who were correct, and give billions of dollars back to the people who were wrong. So basically, if you have a position in GLD or SLV or a position in gold futures and gold blows up, the exchange, whoever manages it, the CME, the LME, the LBMA, whatever, they're going to take everything from you. They're not going to let you get your physical from your derivatives position. And even if Eric Sprott wanted to, let's say he's an honest man, I know he's an honest man, and even if he wanted to give his physical silver to anyone who had his PSLV certificates or his PHYS certificates, he might not be able to do that because sovereigns might stop him out of desperation. Don't know. So you need to have a physical supply stored somewhere, because what we saw in nickel means they will reverse all of your paper gains and take everything from you, and you will not see anything from it. There is some justifiable anger in the manipulations that we see in the gold and silver markets, the dumping of thousands of contracts in a minute, or whatever the number is, at 7 a.m, et cetera, et cetera. And does that affect the market? Yeah, it does. But the real problem is the fact that these markets even exist, and they only exist because it's fiat anyway. So, I mean, this is what happens in the fiat system when you have a money supply that keeps growing. You need paper to manage it, and that's going to be a need that is filled in this kind of market, and that need is going to be filled. So, I mean, the problem though with gold and silver is that when we're going to see this sort of short squeeze that's happening in electricity markets now, that is going to be a sign of a collapse in the confidence of the dollar. And that is the pyramid, the skeletal structure of the entire pyramid, the entire monetary pyramid, of which electricity and its derivatives are a small pyramid within that larger structure. So when gold and silver make their moonshot and there is a short squeeze in the derivatives on gold futures, then you're going to see the prices of everything. It's going to be a short squeeze of everything, of every paper derivative, market of the entire world, because gold and silver are the money with which all of this stuff is denominated in. That's what's going to happen, and it's not like we're going to wake up and gold's going to be like $35,000 an ounce, and all the gold bugs are going to celebrate, and we're going to get some kind of like swanky hall in a hotel and party. It's going to be a much scarier world, and we're going to have to, I guess, be in charge of it in some way and calm people down. But what my goal is that for people that have the capacity to understand what money is, and they kind of get it, but they don't quite have a hold on it yet, so they're still emotionally affected by all these swings. They're the ones that need to be rock stable, because they're the ones that have the capability of at least picturing what is going to happen here. And they need to keep their heads because nobody else will. The truth is that when gold and silver are money directly and the inflationary machine is now broken, then the whole idea of trading gold in dollar terms won't make any sense, because nobody would do it, because nobody would want the dollars. If you're using gold as money, that means nobody's using dollars as money. So then what do you need people to tell you that you shouldn't have a gold and silver futures market? There just won't be one. So really, when I'm saying there shouldn't be a gold and silver futures market, I'm saying that gold and silver should be the money. And the question of what do miners do in that situation? Well, I mean, that answer helps understand how a futures market would function without gold and silver futures. I mean, if you're a gold miner, then you understand how much it costs to mine an ounce of gold, okay? And you understand what the purchasing power of that ounce is, more or less. So you don't need to hedge. When the cost of mining gold goes too high, you simply stop doing it. And when it goes low, you do it again. And that's another reason why gold is such a good money, because when prices rise too fast and the price of mining, the cost of mining rises with it, so then the gold supply stops expanding, because it's not worth mining anymore. The minute it's worth mining, they do more of it. And if you that brings me to another point I just thought of. Like, if you have a mechanism that can hedge your gold production, then that would kind of mess that whole mechanism up, because you would then theoretically be able to mine gold even when it is not economical to do so, and because your hedges protect you, and you'd be expanding the gold supply, the money supply, in a time when it would not make sense under a free market to do that. Which is, it might be why we saw such crazy movement in the gold miners in 2011, 2013, why they just totally collapsed, because they had all these hedges that didn't work, and then it just made their books even worse. So the fiat currency system really messes up the books of miners as well, and they'd be much better without a futures market, because that would be the natural market of you mine gold when interest rates require a bigger gold supply. When interest rates rise, you need more gold to lower them down again and to keep everything in balance. Yeah, in a sound money system, you would have hedging, but it wouldn't be like, if you don't hedge and you get caught, you're dead. I mean, that could really happen in a fiat paper money world, because prices can go just completely nuts. Or, even in a few days, like, what happened in 2020 when it went to negative $35 a barrel. Like, what does that even mean? But yeah, these things can happen in this kind of crazy monetary world. Could it happen in a gold currency world? No, it can't happen. So, but the price of oil and the price of whatever commodity would be basically stable, barring like an alien invasion or something like that. There wouldn't be such a need for everyone to hedge, because you have to be hedged or you might go out of business. So it would be a much smaller market, and a lot of it could be peer-to-peer, which would make it a lot more stable. And they'd make their own agreements. You wouldn't need to have all these centralized exchanges carrying all of this risk on themselves. And if they go down, everyone goes down. I mean, it's all just scary structure.